The problem that we're solving is that the institutional asset managers, the people that manage money on behalf of the pension fund holders and the mutual fund holders, their assets have grown so large that every time that they want to buy and sell stock, they move the market. It's a simple supply and demand imbalance. And really, the asset management industry has grown very large in a very short period of time. Really, it grew out of the baby boomer era, when the baby boomers started having savings and started investing that in the market. So the institutional marketplace, the institutional managers, the ones that manage money on behalf of those people.
Right.
Well, what Liquidnet has done is created an institutional marketplace,
right,
where institutions can go to trade stocks among themselves without moving the market. And ultimately, the more money we can save them in market movement, the better the returns are for all of the people that invest in that asset management. It's better for the pension fund holder, it's better for the mutual fund holder.
Right, so you basically cut out the counterparties in a trade, or you cut out the number of counterparties?
We do disintermediate the brokers, and we disintermediate the exchanges as well. And it's only because the institutions themselves need their own type of marketplace to create the anonymity that they need. Unfortunately, there are so many different types of constituents in the marketplace that feed on the institutional order themselves.
You've got to keep it open.
Well, the exchange, the exchange is not necessarily the best venue for the institutions to trade efficiently. So again, it's sort of like a B2B exchange. It's not that we cut out the exchange completely. Most of the trading is done on the exchange. But when we can help out, we do save them the institution money, which ultimately helps the returns of everybody that invests. We don't view ourselves competitive with the exchanges at all. We are very complementary to the exchange. The exchange is where most volume gets done. And they have a tremendous breadth of coverage. You can trade any name, any symbol that you want to on an exchange. The problem is that the depth that they have is very small. So, our average execution size in this region is about 100 times that found on the exchanges. So, the exchange is there for price discovery. That's where price is formed. But they're very not as good as quantity discovery. We do not have near the breadth of coverage of an exchange, but when we do have something to trade, the depth of coverage is much larger. So if you combine, if we work directly with the exchange, you have price formation with quantity discovery, which means you have a more efficient market. Anytime you have a more efficient market, there is more trading. More liquidity brings more inflows. More inflows means there's more capital available for startups, for IPOs, for existing capital formation. It's better for the country. Well, Nomura is a broker, so what they're doing is they're diversifying their offerings. So I understand that. Could other brokers
like Bonnie Mellon
compete with us?
Yeah. State Street.
There have been lots of people to try, and most obviously have failed. The one thing that we have to understand is that dark pool is a broad category. What the SEC has recently done is said, look, not all dark pools are created equal.
Yep.
We are a block pool. We provide a very specific, needed service for institutions. All the other dark pools are internalization engines. Those internalization engines are from Nomura, from UBS, from Citibank. And what they do is they cross all of their internal order flow from retail, from institutions, from algorithms. And their average execution size is really not different from that found on the public exchanges. So the SEC said, block pools, you're good. You provide a necessary service. I'm not going to take away any tools that the institutions need to protect their order flow and their orders from moving. But the internalization engine dark pools, you guys, you're creative in the United States. They created 40 private exchanges, so to speak. And 40 private exchanges takes a lot of liquidity off of the primary markets. That's a problem. So from a block pool perspective, we're only one of two in the United States. There's only one of us in Europe, and there's only one of us in Asia. So, it's not that easy to actually do. We are adding liquidity back into the market. If you understand how institutions trade, let's say an institution has $10 million worth that they want to buy in a security. Without Liquidnet, they might give the broker $1 million to buy. They want to protect their information. So $9 million is sitting upstairs at that institution, not providing liquidity to anyone with no hope of getting executed. What Liquidnet has done is reaggregated all of those leftover pieces of orders among all of our asset management clients around the world. And we've created a new liquidity pool where there once was none. We've added capacity to the market. We've incremented the amount of liquidity that's available. You know, it's tough to say whether it's a bubble, it's speculation, or it's actually necessary. The fact that China is up 65%, 70% this year is amazing, but the price to earnings ratio is only a little bit above where it is in the United States. So, you know, their GDP is expected to rise 8% this year, the United States much less. So I don't think that we've gotten to a bubble yet. And the only thing that Liquidnet provides is greater efficiency of trading. The more efficient, again, trading becomes, the more capital flows can go into that country. If you have a highly inefficient country, then that severely limits the amount of money that any asset manager can put in, because returns are generated only when you sell. If it costs you a lot of money to buy and it costs you a lot of money to sell, that affects your returns. We don't use algorithms. We are like eBay, right? And most of the people that that use us we don't have a manual. So either there's a match or there's not a match. And if there's a match, then it's very intuitive. We negotiate through our system. So if you traded on eBay, I don't think that anybody had to read a manual to go and bid on something on eBay.
Right.
No different with that. There are very few eBays in the world, right? Why?
Volume.
Well, liquidity begets liquidity, right? If you wanted to
Critical
buy
mass.
something,
Yep.
that's correct.
Yep.
Chances are they have it on eBay. If you wanted to sell something, they have so many customers, the best place to sell it is on eBay. So our value proposition is the amount of liquidity that we have in the system, and that translates into opportunities to be able to trade. The fact is that we've got over 600 of the largest asset managers around the globe that are filling our pools in the 30 countries in which we trade with their liquidity, which provides a tremendous amount of opportunity for everyone.
Yeah, but so how do you support the goals of the different types of institutional investors? You know, some would be the hedge funds would be more alpha driven, and you know, some are more, you know.
We're very particular as to who is a customer of ours. So we don't have high frequency trading. We don't have day traders on the system. We don't have brokers on the system. Our customers are those very large asset managers whose responsibility is to buy and sell millions of shares of stock or millions of dollars worth of stock in order to create the returns for their shareholders. So it's not frequent trading inside and out. It's really those fundamental players who need to acquire large blocks of stock. You know, it's been mixed. We have partnerships with exchanges around the world. And you know, it takes a little while for us to get to know each other, but ultimately the exchanges do look at us as complementary and worth partnering with. When we first come out into a region like Asia, we try to become very friendly with the exchanges, and it's a very cordial relationship. At some point in the future, they understand the value that we bring. If we can bring them, we have $16 trillion worth of equity assets that are in our system from around the world. I would think that that would be a very valuable thing for any exchange around the world to want to have, and that's what we have to offer.